come. The new favorite meme stock, still hitting a little bit of a wall today. Next, this is Open Interest.
This is Bloomberg Open Interest. Let's get a check on stocks. On tariff day, we don't see the drops that we were seeing at the start of trading or in futures. Right now, only 1/3% off the S&P 500, 0.2% off the NASDAQ. So some volatility in this market, to say the least. In terms of the individual movers, NVIDIA right now down only 0.75%. It had been down more than 2%, and that's a huge relief. Apple only down 0.25%. Trump Media and Technology, we're going to talk about that with Bailey Lipschultz in just a moment, but off another 6% today. And Newsmax down 36%. Okay, it had been up more than 2,300, and it's still worth double-digit billions of dollars, but some huge volatility there. Katie?
Yeah, it has been a wild ride with this media outlet. At one point, it had a larger market cap than Fox Corp, which is, of course, the parent company of Fox News, and it's still up about 1,400% over the past 3 days, so I don't think too many people are crying in their beer yet. But let's bring in Bailey Lipschultz. Of course, he covers IPOs, everything else at Bloomberg News. And Bailey, we were talking about how there's speculation that there's retail behind this move. The speculation being, take a look at the share price. Can we say that with authority, though, that this is a retail name?
Yes and no. When we look at some of the chatter on things like StockTwits, it definitely was the #1 trending ticker yesterday and the day before. One thing that I keep a close eye on is buy orders on Fidelity's platform, which they do still publish. That was a top 5 name yesterday, with buying still outstripping those to sell. It's hard to kind of parse through the data like we did back with GameStop, where there was so much excitement on StockTwits, Wall Street Bets, and other forums to outright call them retail-driven meme stocks. But when you see a company up 2,000% and you see people calling it America's stock and the company talking about buying the IPO, there definitely is a flavor of retail there.
Right. The flavor is interesting because when we're normally talking about IPOs and environment, you're looking for profitability. This is not that, is it?
No, not at all. And I think that's been one of the interesting things when you look at this IPO backdrop. Obviously, we talked about CoreWeave pricing poorly on Friday. It's now up 44% from its IPO. We did see buying in a few other small, tiny IPOs the last few days with some of these big rallies. So the big question is, when you have an IPO, you only have a small amount of shares actually available for trading. So with a company like Newsmax, how much is actually being flipped over by either Wall Street or Main Street, and how can you make a sense of some of this volume when, again, you're seeing the float flipped over essentially every day right now.
It's so weird to see. I mean, why would DJT be down 6% on Liberation Day, on Make America Wealthy Again Day?
Well, they filed to open the door to sell more than 142 million shares total. So actually, as part of that filing is Donald Trump, who owns 114.75 million shares of the company, filing to start the process, if they so choose, to tap the $2.1 billion in value. So you're seeing selling pressure. You're seeing a lot of speculation over if Trump will end up selling. He did move his stake in the company to a trust overseen by Don Jr. at the end of last year. Again, starting the process, it does not imply that sales are taking place now or will take place in the immediate future. This filing does actually need to be declared effective by the SEC, and that can take a few days. But certainly when you see a company that has been so heavily tied to Donald Trump's wealth, paper and real, that's why it's under pressure.
Right, it leads to the question, if everything the Trump family touches, is it gold or not gold? In this case, Donald Trump Jr. driving down the shares of DJT. We spoke to Eric Trump yesterday. Hut 8, American Mining, Bitcoin held a little bit of a bid. They lost some of that yesterday, Katie.
Yeah, we'll have to continue to watch that one. But at least for today, we know that DJT is down pretty mightily. Bailey Lipschultz, it's great to see you. Let's take a look at the traditional market right now. The S&P 500 down about 0.4%, pairing its losses. But again, I told you to watch volume, and this is why. Volume is nearly 19% below its 20-day average. We do have some selling pressure right now, but again, we know that the big event is at 4 p.m. We're not quite sure what's going to be delivered. Our latest reporting suggests that the White House team doesn't know either, so it's hard to make a big bet in this market.
I mean, Donald Trump himself has said that he already knows what he's going to do.
I'm just going off of our Bloomberg News reporting, Matt Miller.
I'm just telling you what the president said out of his mouth, right? Okay. So we'll see what actually happens. The silly thing is that some people expect stability after this. Coming up in the next hour, former Undersecretary of Commerce for International Trade Stefan Zelig joins us in the studio, plus a read on the supply chain with FreightWaves CEO Craig Fuller. This is Open Interest. are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Shonali Bassick.
And I'm Katie Greifeld. We take a look at these markets right now. In wait and see right now before that 4 p.m. announcement, you can see a little bit of a down day right now. Not as bad as it was. We were down over 1% at the open. We've since pared that to about 0.4%. And now we have some economic data to chew on right now. Factory orders for February coming in at 0.6%. That is slightly above expectations, about 0.5%. Durable goods, the final reading for February coming in at 1%. The expectation had been for 0.9%, so a little bit above expectations on both of those reads. Let's make sense of it now with Bloomberg's Michael McKee. What do you make of these figures?
I think the number we have to look at, Katie, is capital goods ex aircraft and defense, because that's the proxy for business spending that goes into GDP. That's what everybody's worried about for the first quarter. This is February data, and the capital goods number comes in down 0.2%. That is a little bit better than the negative 0.3 that we had in the preliminary report. Shipments are up 0.8, though. That is worse than the 0.9 that had been initially reported. Basically, what we're looking for is how bad is the first quarter going to be. Yesterday, the Atlanta Fed's GDP Now number came in at negative 1.4% adjusted for gold. And so this isn't going to add a whole lot to that. Friday also, we're worrying about what's happening with jobs, and the ADP number came in today, didn't move markets at all because I don't think anybody's putting a lot of weight on it. 155,000 new jobs, more than the private sector forecast for Friday, but it is got some weird underlying stuff. 21,000 manufacturing jobs. The forecast in the Bloomberg survey is 0. ISM manufacturing employment fell according to that survey, and they said we lost 41,000 jobs out west and gained 89,000 in the Northeast. It seems a little weird, even with the California fires. So the data aren't giving us a whole lot of clues today, but I don't think anybody's paying all that much attention. Everybody's eyes on 4 o'clock.
We do see, 1% durable goods orders is better than the survey and not as bad as a stick in the eye, right? I mean, people are still putting in orders. They're still buying stuff.
Well, a lot of this, Matt, is probably pulled forward because people were trying to get ahead of tariffs. Also, the headline number for durable goods is always affected by Boeing and how many planes they sell. But ex-transportation up 0.7, same as in the initial report. So it looks like there was some buying. Whether it is standard or trying to stock up is what we don't know.
Mike, we thank you so very much for looking under the hood. Of course, that is our own Bloomberg's Michael McKee. Now, there's the economic data, and then there's all that tariff talk. And joining us now for the impact, Stefan Seelig. He's Bridge Park Advisors managing partner and former Undersecretary of Commerce for International Trade under former President Barack Obama. Now, he helped negotiate the transatlantic trade and investment partnership between the U.S. and the EU. So there's a lot to say about what to expect in terms of how the EU might handle what's to come. But first, what's the cleanest read for the outcome of today's Rose Garden speech from where you sit?
I guess the clearest read is going to be the outcome is going to be undecided, and it's going to continue to evolve. I think the business community is clearly looking for some clarity, predictability going forward. I think we'll get some direction coming out of the Rose Garden today, but frankly, one of the things we've seen from this president and this administration is the ability to evolve his thinking.
Is the business community going to remain supportive of this president if he doesn't deliver at some point some level of stability, some level of certainty?
I think, Matt, that's the key question, right? The outcome of all of these tariffs is going to take a while to play out. The market reaction is going to be the market reaction. Frankly, our political leaders, while impacted by the equity markets and even the fixed income markets, while that is important, really what their job is to create good-paying jobs for the United States and reshore some of that manufacturing and bring back some of those jobs that have been lost. That is going to take time to play out. The question is how much pain is the economy and the markets going to suffer in the interim, and whether or not there's going to be the political will for this president and this administration to, keep it up.
By the way, is it worth it? By the way, if we go through this, right, pain and volatility and suffering, but at the end of 4 years, we have brought back millions of American jobs, high-paying manufacturing jobs to these shores. Is it worth it?
You know, I think it is, with one caveat, which is even if the tariffs are effective from an economic perspective and do the things that you've just suggested, you know, they legitimately might do, what has been the ramifications and the knock-on effects of that? What are the relationships with our allies and friends, and how badly have they been damaged because of the way we've treated them, for example? And is the light worth the candle? And that, to me, is really the question that will even take more time to figure out than just whether or not the tariffs have been effective. I guess the other thing I would say, it's effective in doing what? Is it effective in addressing our bilateral trade deficits with various countries? Is it effective in curbing fentanyl coming in from our southern border? Is it effective in our immigration policy? Is it effective in having Europe pay for their own defense? You know, there are so many things that the administration and the president have talked about that tariffs are a cudgel to help address, but they can't all be accomplished because, in fact, they're mutually exclusive in many respects.
Right. It's a good point. What is the end goal? At one point, the administration was calling this a drug war, but clearly it looks like, just looking at the market and some of the headlines we've been breaking, this is a trade war. But you brought up our allies, and that's where I want to go, because Jason Furman was on Bloomberg Surveillance earlier today, and he was talking about our relationship with our trading partners, that basically you think about the knock-on effects here, that his view, this is going to drive our trading partners closer and closer to China. Is that your view as well?
I don't know. You saw all the press about Japan and South Korea now speaking with China directly about how to address some of these things. I frankly think that's a bit of a far reach, given how connected we are economically and politically. That being said, I think for sure we are going to move to a world of trading blocks, and that is going to take time. And what those trading blocks look like is still yet to be determined.
Stefan, I want to go back to something you were saying earlier about jobs, because if the point is to bring manufacturing back on shore, but you also have this ballooning federal deficit, and you see the administration cutting back on all sorts of spending. You have Howard Lutnick really threatening companies to pull back CHIPS Act funding. Then do you believe those jobs will really materialize if the government can't spend to get us there?
Well, it's not just spending, right? It's also where might they go, because some of these exports are not coming in from a particular country, right? So it is not clear to me that those jobs are ever going to come back to the United States. If you look at what really has caused the elimination of those jobs, for sure, global trade is a part of that reason. But really, it's technology. If you go to factory floors, they don't look like what they looked like in the 1950s. That's what technology has done, is obviously going to continue to do and evolve over time.
I also want to tap into some of your prior experience before the Obama administration. You were one of the most senior deal makers at Bank of America. You have, even after that, served on the boards of many companies. You've worked with companies like Carvana, for example. So what's the readout from corporate America after all is said and done? We have seen a near halting of M&A. Yes, you've seen some things come through, but even if things are more certain, do you think that you see that comeback in Wall Street deal-making activity that has been so talked about when you have seen clear intervention from the Trump administration and its antitrust officials?
You know, look, the antitrust environment, I think, will be more rational than what we saw in the last administration, for sure. But M&A comes down to a confidence and lack of volatility. Clearly, what you're seeing is lower business confidence, lower consumer confidence coming out of these announcements. And I think if, in fact, we are right that the 4 o'clock call today is not really going to end this discussion and this debate, you will continue to see a dampening of deal activity for the foreseeable future.
Well, less than 6 hours to go, if I believe our little countdown clock. Hopefully we can bring that back.
Pull it back up.
Yeah, come on. It's doing a great job. So 5 hours and 50 minutes until we get that address. I want to talk about the positives here. When you think about the Trump administration's approach to trade, I'm taking a look at your notes. You write that this has been a wake-up call of sorts to Europe. You think about Germany approving $1 trillion in defense spending. I think that blew Matt Miller's mind.
Never would have expected that from the CDU.
Exactly.
Right?
So you could make the case that there are some silver linings to the chaos.
For sure, and that's a very good example. The administration has given Europe and, in fact, Germany, in the case that you've just suggested, political cover to do the things they should have been doing for a long time. And so that's an outcome, a positive outcome, and there are going to be many others. DOGE, for example, I think the only thing that I can think of that has bipartisan support at the 80-ish% level is that our government is inefficient and needs to be cut. Now the question is, are we doing it in a smart and strategic and thoughtful way? Do we really want the richest man in the world on the stage with a chainsaw as the way to go do that? And so that, to me, is really the question, which is, not are some of the policies well-informed, constructive, and the right thing for our nation, but are they being implemented in a thoughtful, strategic, and tactical way?
If only it was just the chainsaw, right? Instead of the salutes that he's been giving. Stefan, great to have you.
Thanks, Matt.
I actually have one more question.
Oh.
And it's for you, for Stefan, actually. Speaking of DOGE, I mean, the other aspect of this is efficiency. It's the idea of tax cuts, right? You were talking this morning. I can't believe we went an hour and a half nearly without you talking about it.
I'm trying not to talk about it, but it's killing me that, Donald Trump promised those of us who live in this part of America that he would lift the SALT cap that he put on in 2017. And now it looks like they're not even considering that.
Yeah, look, obviously I'm a New Yorker, so I would be all in favor of that too, Matt. But I think one of the things that is clear is that if you look at some of the quite aggressive statistics that are coming out of the White House about the amount of revenue that could be raised from these tariffs, that the administration is going to look to justify tax cuts based on some of these tariffs and trade policies.
Stefan, we thank you for joining us. The reason I ask this, too, is because the other silver lining
I appreciate it.
Do we see tax relief, especially for those blue states?
Well, the question is, what is tax relief, right? Because for me, and it's not about me, obviously, but no TCJA. Like, I'll take the 2 extra points in my income tax if I can get a state and local tax write-off.
Matt has done the math, but it comes back to sequencing that, of course, the priority for the Trump administration has been trade. Trump has billed himself as tariff man. Those market-friendly policies, lower regulation, tax cuts, they're clearly not as high on the priority list. But speaking of tariffs, don't miss our White House tariff announcement special. That's live at 4 p.m. New York time. Now, coming up, hedge funds saw wildly different returns last quarter in the face of Trump's trade wars. We'll bring you the winners and the losers next in our Wall Street Beat. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is another read on the U.S. labor market.
Workers are staying longer than you expected. How do firms actually deal with that new data point?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
I do go back to what the lag time is between the soft data and the hard data. What's the lag data for the Doge effect?
That will speak to the anxiety of the labor market right now.
The March Jobs Report, Friday on Bloomberg.
Getting out of high interest, look at what's making headlines around the world. A federal judge is permanently dismissing corruption charges against New York City Mayor Eric Adams. This hotly anticipated decision followed a political firestorm ignited after President Trump's Justice Department ordered prosecutors to drop the case against Adams. The decision will allow Adams to campaign for a second term without the threat of jail hanging over his head. And Macy's is clawing back over $600,000 in cash bonuses from executives after an accounting scandal led to inflated pay. The retailer says it overpaid executives by about $609,000 as of the end of 2024. Yesterday, Macy's announced its chief financial officer was being replaced by Thomas Edwards, the former CFO at Capri. And Izzy Englander's Millennium Management and Ken Griffin's Citadel lost money last quarter, even as other hedge funds gained. Last month was fraught for many traders as a number of hedge funds suffered losses in equities, index rebalancing, and commodities. Some teams that manage money for multi-strat firms were stopped out, meaning they were forced to liquidate or trim their positions. And 2 trading units focused on index rebalancing at Millennium lost about $900 million as of early March. Shonali?
And Matt, that brings us to today's Wall Street Beat. Joining us now is Bloomberg chief hedge fund correspondent Nishant Kumar. Now, I want to point out that these multi-strategy firms, they are the whales in this ocean of a market, and you have Balyasny, Millennium for the quarter down 2% or more. Citadel from Ken Griffin also on the decline for the year. What does this mean in terms of the ability for these massive funds to take on more risk?
So we can look at in 2 ways. Yes, they lost money, but March was an amazing month where the risk management did kick in. So if you look at the first week of March, that was really brutal for some of these firms. The losses were much, much deeper. But they again proved that through the month, they made changes, the degrossing happened, and in the next 3 weeks of March, they recovered most of the losses that they had posted. So, you know, March is a losing month, but it's not a disaster for them.
Well, let's talk a little bit more about the folks who did well. I mean, you're right, Renaissance Technology, David Einhorn's Greenlight Capital, we could see that on the table. What is standing out for them that actually helped them kind of do well in March when others failed?
So the quant strategies have done well. So that's one consistent trend that we see, although we have very limited amount of data, so we should be careful about making judgments on that. But generally what we are seeing is fixed income did well, so some of the macro traders did well. Quant strategies did well as some of the equity market neutral strategies performed really well. We just broke a story about a Citadel spin out, like the former Citadel traders, Fifth Delta, they're making 9% in the first quarter. So we are seeing some really big positive returns as well, but in the multi-strat landscape, we are yet to see any significant winner coming out of March.
You are supposed to be protected from losses with hedge funds. At least that's the way I understood it when, you know, I first started looking at these things 25, 30 years ago. And we have seen a down market, right? At least here in the U.S., the S&P is down about 5% year to date. Are these funds beating that? Are they keeping investors from losing as much money as they would in the market?
So all these 3 multi-strat hedge funds that you mentioned, they have all outperformed. Although they have lost, but they have outperformed S&P 500. We also need to take a step back and look at the broader context. Look at the last 5-10 years. All these hedge funds have performed really well, consistently posted positive double-digit returns on a high Sharpe and low volatility. So that's what investors look for in a hedge fund. Beating S&P in a bull market, for that you go to ETF long-only funds, not to hedge funds.
To Matt's point here, we're finally hitting this market hiccup. You had 2 years of equity markets going straight up to the tune of double-digit percentage points. Now that we're hitting a rocky world, where are people going? I'm still struck by the immediate reaction you had from the co-CIO over at Citadel asking his traders to play offense. Where's the offense?
So that really helped them. So if you look at Citadel example, in the first week, we reported they were down 1.7%. They ended the month down like 5.5%. So that offense kind of helped them to recover from their losses. And going forward, I mean, volatility is a friend of hedge funds. It may not be a friend in the immediate, like few days, a few weeks, but over time, this kind of a market is going to help hedge funds make more money and really show their worth.
All right, Nishant, great reporting as always. Really appreciate you keeping the scorecards of all these different hedge funds. That is Nishant Kumar. Now, still ahead, Hims & Hers is expanding its weight loss offerings, including access to Zepbound, but it's going to cost you. Details next on Bloomberg Open Interest. right, it's time now for Social Climbers. The company's making waves this morning. And first up, Hims & Hers Health is broadening its weight loss offerings, adding access to brand name shots such as Zepbound. Remember, the company previously focused on cheaper compounded versions, and a monthly prescription for Zepbound will cost about $1,900 a month, which is $800 more than what Eli Lilly itself charges. Next up, we have Walmart still pushing its Chinese suppliers to cut prices in order to offset Trump's tariffs. Walmart is requesting that suppliers cut prices by as much as 10% for each round of tariffs. And finally, we have Truist getting downgraded over at Raymond James, the firm highlighting the stock's unattractive valuation and mounting headwinds ahead of earnings coming up in just a couple of weeks. Stock is pretty much unchanged at this moment. But let's take a look at what's going on in the broader market right now with less than 6 hours to go until that 4 p.m. Rose Garden announcement on tariffs. You can see the S&P 500, the NASDAQ 100, they've been pairing gains all morning. That was accelerated a little bit after we got that eco dump at the top of the 10 a.m. hour. Of course, factory goods and durable goods coming in better than expected. You add that to what we got from ADP at 8:30 this morning. More jobs than expected were added in the private sector in the latest reading. But again, it's all about what happens this afternoon. And coming up, as I've been saying, brace for impact. President Trump is set to unveil his package of tariffs later today. We'll break it down with FreightWaves CEO Craig Fuller joining us next to show us what he's already seeing. This is Open Interest.
The impact is freight rates will go up, no matter what. And unfortunately, there's no choice but to pass that along to the cargo owner and ultimately the consumer. Is it an apocalypse? I don't tend to be that dramatic.
That was the Genco CEO, John Wobensmith, saying tariffs and other protectionist measures taken by the Trump administration will push freight rates higher. Freight Waves tracks pricing for the global freight market, keeping an eye on logistics and supply chain in real time. We're joined by their CEO, Craig Fuller, now. So, Craig, it was fascinating to talk to Wobensmith yesterday, and his point was what they're going to do is either avoid the U.S., since they do 90% of their business elsewhere, or just pass the costs along to shippers who will pass it along to consumers. Is that what you're hearing from everyone else as well?
Yeah, it depends on where you sit in the supply chain or in the freight market. So every one of the different participants, whether we're talking trucking, rail, air, and ocean, has experienced its own version of the market. Ocean container volumes are at record highs, actually beating out the COVID highs, and they have experienced incredible volumes. Trucking is actually quite sluggish. We had a nice recovery from the Great Freight Recession, which has been going on since 2022. It was recovering well after the election and up until inauguration. And really, Valentine's Day on, we've seen a pretty sharp slowdown in trucking demand that has been really caught the industry off guard.
I want to talk about the pull forward effect. We were talking about it when it comes to the automakers. I mean, you have consumers buying cars ahead of these tariffs being placed on. Are we seeing that on the part of other industries? I mean, if you take a look to the retailers, for example, are we seeing any stockpiling going on there?
Yeah, absolutely. We've been seeing it since last summer, since it became apparent that Biden was not going to win the election or become the candidate, and it looked as if Donald Trump was more likely than not to win. The supply chain industry, retailers have been importing, manufacturers have been importing, understanding that trade policy was going to change. Donald Trump made it very clear that he was intending to use tariffs as a part of his strategy. And so most importers of any scale have been planning for this and have been pulling forward. And that's what has been driving the international container movements. And what has benefited is the international ocean container companies have actually benefited greatly from this, but so have the railroads, because intermodal, which is a slower form of domestic transportation, have also benefited because effectively these have been warehouses on wheels. They're moving warehouses that the retailers have been taking advantage of the very slow transit times because they haven't needed inventory and have been able to use that inventory for just pre-stocking purposes.
What can you deduce from that pull forward, though? Because what you're seeing, for example, from the automakers, fine. People are buying things now. People are stocking inventories now. They have been for months. But what about when you start to see these tariffs start to take fuller effect and even more of them?
Well, could see a drop off. I think the question that most people in supply chain are asking is, when is enough or when does this end? Like, what is the end game for this? And I think as long as there's uncertainty, I believe that companies will continue to import at record volumes just to protect their supply chains. Once it looks like we have some reprieve in that, and once we understand what this is actually going to look like, I think we'll see potentially a small hangover because they have so much inventory and they won't feel like they need to prepare. So that's what we're looking for. We're looking for direction. We're looking for specifics. I think the thing that's really caught most people off guard is the focus on Mexico and Canada. I think largely the industry expected tariffs and tariff pressure on places like China and Vietnam and perhaps India. Didn't really see the level of attention and focus on Canada and Mexico. And I think that's caused an enormous amount of anxiety and frankly is probably sapping a lot of business confidence because people don't know how to plan around that. If we're going to rebuild manufacturing in the United States, we have to have the components and the commodities from Canada and Mexico to build that. And I think that's what's caused an enormous amount of anxiety, is that in many ways was unexpected.
Yeah, I mean, they probably thought USMCA was a good deal, maybe the best deal ever. Turns out it was awful and not worth the paper it was written on.
Donald Trump said as much. I mean, he said this was the best trade deal he's done. So,
he also tried to block TikTok, right, with an executive order, and now he's trying to save TikTok, and he's willing to trade tariffs for it. Let me ask about Chinese-built chips, because this is a huge story. And we were talking again with Wobensmith yesterday, and he said, look, there aren't U.S.-built ships. We don't have the big shipyards anymore, and they're not coming back. Do you think that's the case?
Yeah, I think, the reality is that, well, first of all, there's the policy element of these fees that the United States wants to put on Chinese chips. And to be very clear, this was something actually that the Biden administration teased before in the previous administration. So it's something that's actually likely to stay in place. I think the frustration is that we don't build ships in the United States, and there's a lot of policy changes that need to take place. There's also a lot of government funding and support that needs to happen in order to affect that, to change that, which seems very unlikely. It doesn't seem like we want to spend the money to actually build domestic shipbuilding, which is really the biggest issue here. But I do expect these fees to stay in place, and as they do, they will create pressure on international shipping. It doesn't look like the Trump administration plans to reverse those. It also doesn't look as if the Democrats will have the resolve to reverse them if this does come into effect.
Craig, we thank you so much for your time, for breaking down all the tariff effects. That is Craig Fuller, FreightWaves CEO. Let's get a check on these markets, because you're looking at an S&P 500 trying to erase declines. It was up for a moment, now back down about a tune of 0.1%. The NASDAQ 100 still losing a little more than 0.1%. It's interesting, if you look at the components of the S&P 500, guys, it's really that financial sector that is leading the sector-wide rebound. You're not seeing the other sectors face the same kind of rebound. Yields are nice and low. We're watching that 10-year hang out below 4.2% most of this week, all week really, trying to flirt to get to as low as 4.1%. Discover, MasterCard, Capital One, even the big investment banks are really up on the day, but there are a few other things as well.
Yeah, I mean, if you take a look at what's moving in the S&P 500, it's pretty much an even split if you just take a look at the top 500. We have to talk a little bit, though, about Newsmax and CoreWeave going in different directions. Newsmax to the downside. CoreWeave, it has a pretty rocky debut, but now it's moving to the upside. So trading places there a little bit.
Yeah, I mean, so Newsmax is not a surprise, right? This was a $265 stock yesterday. It's $124. I'm sure if you go on Wall Street Bets, you'll see everybody looking for tendies here.
It's a hot topic.
It's a rug pull. But CoreWeave is, to me, that's very surprising. I mean, this was an IPO that went off really poorly. I think they sold shares at $40 a pop, right? And now it's trading up to 60. What drove it up 40% yesterday? I have no idea.
Cathie Wood was buying.
That's true. Cathie Wood did buy in some of her funds, but I think it was just punished. It IPO'd on a really difficult day for a technology company, and now you're seeing a little bit of the bounce back here.
There is some comfort to be taken in that correction. The things that went up have gone down.
The pause that refreshes, as Adam Johnson used to say. Yeah. Well, I guess Cathie Wood has some power to move these markets because she's boosted CoreWeave by.
I don't know.
They're not the only ones. They're not the only ones. Anyways, let's get a look at some of the other stocks moving under the hood this hour. We're going to bring in Bloomberg's Nora Melinda for that.
Well, I've got one of the big names on my mind this morning, keeping eyes on Tesla. We are seeing this as the biggest drag on the Mag 7 stocks this morning. And of course, there's a lot of things in the news flow as it pertains to Elon Musk and Tesla. But today we're seeing traders that are looking at vehicle sales that fell 13% last quarter. That's an almost 3-year low for the company. And then on the other end, we had first quarter deliveries that came in worse than expected. Even Wedbush analyst Dan Ives, who tends to be a bull, he said that this is, quote, a disaster for the bulls. So lots to keep an eye on here as we look at Tesla. But another vehicle maker that I'm looking at is Rivian this morning. down as well.
Even though it delivered thousands,
I was gonna say
multiple thousands of vehicles
in the quarter. Wow.
Yeah.
Yes, and Matt, I know you're the car guy, so I'm sure you're all caught up on this stuff. But we're seeing first quarter deliveries that came in line for Rivian, but as you mentioned, still kind of getting beaten up a little bit. Vehicles were delivered about 8,640 against estimates of 8,610. So the scrutiny there is
can't they do better?
Interesting for me.
Yeah,
I see a lot of them on the road.
I see a lot of them on the road. They're very cool vehicles.
I mean, how many people bought the gas guzzlers, though?
Yeah,
Fair.
no, but they're just as expensive, right? I was just looking at a Chevy Suburban. If I go with the 6.2 liter V8, which is really your only choice,
right?
It starts at 87 grand, right? That's even more expensive than a Rivian with like the tri-motor. So
this economy,
yeah,
that is a tough price tag to swallow. But what's going on with Verizon, Nora?
Verizon, I mean, we're seeing shares down just a touch, but they've really been involved in this years-long battle with investors. Investors were suing Verizon, AT&T, Lumen. This is all over allegedly toxic and often buried lead cables that were inherited from former Bell System regional telephone networks. So they've really been in this legal battle here, but we are seeing that investors essentially Verizon's getting off here, it seems to be the case, but they are saying that they felt that the company knew for a long time about these cables, but it seems that Verizon is turning out all right in terms of this battle that it's been dealing with right now.
Nora, thanks so much for joining us. Nora Melinda there on some of the stocks that are moving in this market. I want to bring you some breaking news on Europe right now. The EU is preparing a package of potential emergency measures to support parts of its economy as Trump moves to raise tariffs. The European Commission, the EU's executive arm, working on short-term economic support proposals to go alongside plans to advance reforms and competitiveness in key sectors. You know, this is just going to exacerbate the trade war. Everything we hear, right, from China, how they're going to stop their companies investing in the U.S. and the EU working on all of these sort of non-tariff protectionist measures.
Yeah.
It's just going to ratchet it up.
Well, we heard from the press secretary that Donald Trump is, these are going to affect the tariffs at 4 p.m. apparently, but he's willing to negotiate, always willing to take a phone call. But taking a look at some of these headlines that we're getting, this one from the EU planning its emergency measures. To your point, Matt, I don't know if it's going to, I don't know if they're getting on the phone.
I mean, the amount of money that Europe is going to have to spend just to kind of stave off some of this pain, in addition to that defense spending, that EU versus U.S. trade.
Maybe they should be, you know, maybe it's time for Eurobonds. Maybe they need to do their own TARP. All right, coming up, TikTok's future in the U.S. President Trump is set to hold a meeting on a potential sale of TikTok today, and he told us that he would trade tariff points for Chinese approval on this. So TikTok means a hell of a lot to this president. More on that story next. This is Bloomberg.
Well, President Trump, in addition to that tariff get-together at 4 p.m., he will be meeting with top officials today to consider proposals for divesting TikTok's U.S. operations from its Chinese parent, ByteDance. The deadline for ByteDance to find a buyer is Saturday. So let's break it down now with Bloomberg Balance of Power co-host Kaylee Line. So a busy day, of course, for President Donald Trump. Let's talk specifically about TikTok to start. So what do we know about this proposal and these discussions? I mean, Oracle and Blackstone, these are names that have been floated.
Yeah, and of course, Oracle already has been involved in TikTok's U.S. operations, but this is what Bloomberg is reporting, citing people familiar with the matter, that this would be structured as kind of a joint venture with partners including Oracle and Blackstone, and Oracle would take a partial ownership stake in TikTok's U.S. arm and take control of data security while potentially leaving the algorithm in the hands of its Chinese parent. And this raises a couple questions. One being, will this be seen as adequately compliant with the law if this is the deal that they ultimately end up with, given the law was specifically designed to address concerns around data privacy and propaganda being used by the Chinese Communist Party on the platform. The second question, though, is if the algorithm is allowed to stay in Chinese hands, does it actually make it easier for China to agree to this deal, which is something that is likely going to be needed? And President Trump has suggested that multiple times in the last few days that if he is not seeing a willing China, he might be able to offer them some relief when it comes to tariffs in order to get them to agree. All of that said, of course, for all of this to come together, we are dealing with a very limited time window. As you said, Katie, the deadline is Saturday. The president has also suggested he could just extend that deadline, as he's already done once, which is why the deadline is today, or Saturday, 75 days after the original date of January 19th.
Now, I also want to talk about what's happening in tax world right now, Kaylee, because, of course, in addition to the tariff talks, you do have President Trump, according to Bloomberg's reporting, meeting with Senator John Thune today as well to discuss these plans. The Republicans have put up that SALT proposal as well. Matt has a lot of comments about those. But how do you think it's going to go, given that the tax part of the story is so critical to the overall growth plan?
Yeah, it's going to be difficult for the Senate and House to fully reconcile their budget reconciliation or budget blueprints, which is what the Senate is trying to advance this week, trying to bring it more in line with what the House has outlined in terms of what the actual spending levels will allow to be from the current policy baseline and how many tax cuts could emanate from that, keeping in mind that just the extension of the 2017 tax cuts is one thing. Everything else, including potentially a lifting of a SALT cap, are things that would cost extra on top of that. On the SALT cap, Bloomberg did report yesterday that the plan Republicans are currently considering would see it lifted by $15,000 to $25,000 from the current $10,000. I actually spoke with the former chair of the House Ways and Means Committee, Kevin Brady, who was one of the key negotiators of the 2017 tax package. He was surprised. He thought that number actually was a little bit higher than he thought it would be. But we also spoke to a current member of the Ways and Means Committee, Congressman Greg Murphy of North Carolina, who suggested these are still negotiations that are fluctuating. They have not settled on any number yet. So it's possible that number could go higher or lower. It just depends on where they end up trying to find a happy medium between the SALT caucus, people that represent districts like Matt Miller's, and those who are a little bit more reluctant to offer that kind of break to blue states.
Let's not forget that the president said he would remove the SALT cap when he was campaigning here in New York. And the president put this SALT cap in place with the Tax Cuts and Jobs Act. For a lot of people around here, it would be much better off if the TCJA just didn't get renewed. What's the likelihood that they're going to push through those tax cuts?
Well, Republicans will tell you the biggest devastation of all would be if the TCJA is allowed, JA is allowed to expire at the end of the year, that would be an equivalent of a massive tax hike on the vast majority of Americans, though depending on your specific financial situation and where you live, obviously the SALT cap influences that as well. I know well how you feel about this, Matt, but they are obviously trying to make sure that this gets done before year end. It's just going to be a question of whether or not they can fulfill all of the promises President Trump made on the campaign trail when it comes to taxes, not just on SALT, but no tax on tips and Social Security, all those things as well.
All right, Kaylee, you have a busy day ahead of you. Our thanks to Kaylee Lines joining us from Washington. And don't miss our White House tariff announcement special. That's live at 4 p.m. New York time. This is Open Interest. Welcome back to Open Interest. We actually have a rally on our hands, just slightly, but you consider we started 1% lower at 9:30. Quite a turnaround in the S&P 500. The trading volume, about 23% below its 20-day average. What's dragging us to the upside, it's Apple up about 0.5%, but on a points basis, that is your biggest winner, Shonali. On the downside, you have Nvidia, Tesla, Alphabet, and GE weighing on this index still.
And joining us for a closer look at how markets are preparing for today's tariff announcements, we're going to bring in Bloomberg's chief correspondent for global macro markets, Liz McCormick, because, of course, the macro is really the one that is moving the most. Even if you look at the 10-year yield, you saw this massive jump on the expectation of inflation relative to the tariffs in the wake of the election. You saw so much of that wiped out. You've seen in the 10-year yield alone this week a nearly 7 basis point move lower. It feels, Liz, like that 10-year wants to hit 4.1%. When you look around, when you talk to traders, are they a little worried here about these overcorrections or corrections, if not overcorrections?
Yeah, Shonali, like you said, massive move, the reverse of what we saw after the election, because people are pricing in that these tariffs are going to be more of a hit to the economy now, the way it's been coming through, than inflationary. So I think, yeah, people are really worried today, of course, about what comes at 4 p.m. from the president, mostly because they want to know that this uncertainty is a big factor in the markets. Just, what is happening? You can't price uncertainty. So number one, people are wary, like, will we come out of this announcement and still be uncertain? So they're hoping whatever it is, at least it's clear. People are looking at, like, what's the level of tariffs, but also, does it look like it's a negotiation tool, or is it just a lock? So there's just a lot looking at this. But yeah, bond yields have fallen a lot because it's all about the growth for them. But if the tariffs seem less stringent and more of a negotiation tool, meaning maybe they don't all stick, that may see yields come back a little because the economy would take less of a hit, people feel. But we just don't know. So we're all waiting on bated breath.
But I heard this from Barkin yesterday, that he thought maybe after this we'd move towards stability. Does anyone really believe that, Liz McCormick, that we're going to move in this administration towards stability? Does anyone really believe that these tariffs now are a negotiation tool because they haven't really floated any balloons or given any indication of where they're going, or, as far as I know, held serious talks with our trading partners?
Yeah, I don't think anyone believes, like, remember, Matt, when we came into the year, people thought, oh, it's going to be more about the tax cuts and tariffs. So it's kind of like Trump 1.0. And clearly, you're right, it's not. So no one thinks they're going to go away. But there is some hope that maybe there's some room for negotiation. Like, I think Treasury Secretary Bessent said that maybe the levels are like a cap. They're open to working with partners to, as they wish they will, to not be as high as they could be. So I think there is some belief that maybe that it's a little bit negotiation, but clearly You're right. No, it's not that they're going to just go away and he's going to change his tune on tariffs. Tariffs are very important to his policy for sure.
All right, Liz McCormick, great roundup as always. That is Bloomberg's Liz McCormick. Your 10-year Treasury yield sitting at 4.16% heading into 4 p.m. The S&P 500, Matt Miller, cooking up a third day of gains.
Yeah, a little bit of a turnaround from what we saw pre-market, and it's not impossible that we see a turnaround again. Don't miss our White House tariff announcement special. That's the name of it, the White House tariff announcement special. Live at 4 p.m. New York time. It'll be better than the name. This is Bloomberg.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde, and this is Bloomberg Technology. Coming up, Tesla, the shares sink after its deliveries fall 13% over the last quarter, the lowest since 2022. Plus, investors brace for tariffs ahead of President Trump's Rose Garden announcement today. We'll discuss what this means for the global tech trade and Chinese-US relations. And we sit down exclusively with the CEO of Roblox as the company launches new parental controls, and we discuss its ad partnership with Google. But first, we check in on these markets that fluctuate ahead of the all-important announcements from the Rose Garden later today. President Trump set to unveil what Liberation Day really means. We're flat on the day on the Nasdaq 100, but dig into some of the key movers. I single out one, Tesla. We're off by 1.6%, had been lower in earlier trading. But let's dig into the details of what people are saying is a production issue, but also a political issue. It's the worst sales slump for Tesla going back to 2022. They delivered just 336,000 vehicles, falling short of the average 390,000 estimated by analysts. For more, we go to Bloomberg's Craig Trudell. It's about 360,600 vehicles delivered. But analysts had braced for a slowdown, but not this big of a slowdown, Craig.
Yeah, there were some that were even predicting year-over-year growth, which seems kind of hard to believe when you look at the publicly available figures that we had throughout the quarter, especially over here in Europe. We saw just really substantial declines in some of the biggest EV markets. But this was pretty widespread, right? We saw also in China, the wholesales out of the Shanghai plant were down, month after month in the first quarter. And so, as you alluded to earlier, this is a matter of both, Musk's politicking coming into play, but also, more mundane factors like changing over the Model Y, which, we'll better get a handle on just how much, one factored into this versus the other as the weeks, in the coming weeks when we get a better sense of just how well the newer Model Y is doing.
Mundane factors such as competition as well, most fiercely in China. Can you just break out where, in particular, the geographies were worst?
Yeah, I mean, the company doesn't offer a regional breakdown, unfortunately, but we know that in China, BYD is really just mopping up. We're seeing them really, pull further ahead from the competition, Tesla and otherwise. We've seen also Xiaomi, turn a lot of heads and really, pull away consumers that might have otherwise looked at buying a Tesla. I think one of the challenges that you're seeing for the company is that, they just don't have as broad a lineup or as affordable a lineup as BYD does. And so they are just not the volume player that they used to be in that market and cannot keep up with BYD.
China's Passenger Car Association releasing data that sees an 11% slide for Tesla. In France, it was down more than 30% once again. Just tell us the nuance of what we expect to hear from Elon Musk on this. In the past, they have tried to direct as to why they've slowed down and blaming in many parts the production overhaul. Will we hear from him on the back of these numbers?
Yeah, I think one of the things that's interesting to me about these figures that they reported today is that production exceeded deliveries by a fairly substantial margin. And so this excuse that this was just, production constraint, that was at issue doesn't really seem to work out. Of course, you would expect there to be some lag in that, some vehicles have to be produced and then shipped to where they, are and end up at Tesla stores and with end customers. But, for this gap to be this significant in a quarter where we knew the Model Y changeover was happening, that's definitely notable. I think the other thing that we're likely to hear from Musk, in addition to the Model Y excuse, is, for him to sort of pivot to the talk about AI and autonomous driving and, flip to the robo-taxi event that they've, said is coming in June, that they will start giving people rides in unsupervised full self-driving Tesla Teslas in Austin. That, of course, is something that is potentially a catalyst in the months to come.
And why Cathie Wood remains a bull, for example. Craig Trudell, thank you very much indeed. In another blow to Elon Musk, his Wisconsin Supreme Court candidate was dealt a resounding loss in the state's judicial race. That's despite Musk's backing of nearly $20 million into the campaign. Now, former State Attorney General Brad Schimmel lost to the Circuit Court Judge Susan Crawford, who led with 55% of the votes. Now, that's according to the Associated Press. Still, it wasn't a full win for Democrats. In Florida special elections, they fell short on their bids for 2 critical House seats. And let's just turn our attention now to what also Elon Musk must be navigating, which is President Trump's tariff plan. They're coming down to the wire. And this is as his team is apparently still finalizing the level and scope of the new import taxes. He is slated to unveil this afternoon, which, of course, could be a major shock compared to the U.S.'s tariff rate historically. Bloomberg's Mike Shepard joins us for more. What are the finer details that we're still expecting to be ironed out?
Well, Caro, those are the things that we're trying to find out at this hour. We're all holding our breath here in Washington and really on Wall Street, too, to see what will emerge from those deliberations by the president and his team. They're looking at a basically choice between 3 paths. One is the reciprocal tariffs that we've heard President Trump talk about in recent weeks, this idea that we charge them, in his words, what they charge us. In other words, customizing tariff levels depending on what they see as a relative trade barrier with U.S. goods. The next would be doing something that's a little bit more like a tiered system, where you have a lower tariff rate for countries that have fewer trade barriers with the U.S. and a higher tariff rate for countries that have more trade barriers. And then there's the third option also, Caro, of something that looks more like a flat tariff, one that would be just one level, say 20% worldwide, no matter the country, no matter the level of perceived trade barriers assessed by the administration. Right. That would reflect what he had talked about on the campaign trail, too.
Shep, what's so interesting is technology has taken a hit from a valuation perspective. People trying to dissect how much this affects the semiconductor industry in particular. Have we got any nuance there?
Well, you know, we don't. And there was discussion from the president and his advisors of taking a sectoral approach to the tech industry, naming the semiconductor sector in particular. And the idea was that, look, by imposing tariffs on imported chips, we will try to bring some production back here to the U.S. And they've even referred to TSMC's decision to move to the U.S. as evidence that those tariff threats actually will have some effect. TSMC announced, of course, an additional $100 billion investment in the U.S. Not long after the president took office. But the effects of these tariffs will be felt across the value chain in tech. We're going to see costs potentially rise for all manner of good that comes into the U.S. We're talking about computer hardware in addition to chips. We're also talking about smartphones. So the impact will be felt widely, and businesses will have to make a decision about whether they pass those costs on to consumers or they simply accept smaller margins in the process.
Mike Shepard, always keeping us up to date. Thank you so much. Look, let's now bring in Michelle Guider, CEO of Purdue's Kroc Institute for Tech Diplomacy. You previously served in the Trump administration, the previous one, in terms of diplomacy and global public affairs. This inflationary pressure, Michelle, is it worth it in the short term for long term, bringing potentially more manufacturing back to the U.S.?
Well, I'll start with Caroline. When I served as Assistant Secretary of State for Global Public Affairs, we had 4,000 public affairs officers in 185 missions across the world, advancing one of America's key messages at the time, which was fairness and reciprocity. And that's because President Trump had been saying it since day one. In his first foreign trip at Riyadh, he said it in Da Nang, he said it in Warsaw, he said it at the UN twice, he said it at Davos. So fairness and reciprocity, fair and reciprocal trade, has been a key message of the United States for a very long time under this president. And I think the uncertainty that we're seeing right now and the discomfort that we're seeing is less uncertainty and actually more of an adjustment about what the long-term trajectory is going to be to make sure that the United States is as economically and technologically competitive as possible.
Point us to that longer-term trajectory, therefore, Michelle. This is not a surprise to you. So those that are still feeling that instability, as you call it, how do they see the next few months go if they're a business leader having to decide where to invest?
Well, I think even longer term than that, we have a strategic decision to make as a country. Are we going to wake up and are we going to worry that the S&P is down 8.3% since February? Or are we going to worry about the United States becoming a technology and an economic and a manufacturing powerhouse in the 21st century so that we can lead the world and we can be the safest, freest, and most prosperous country that the world has ever seen? And if the choice is the latter, then we're going to have to re-engineer a lot of things in order to be the global leader and to secure our national security and our prosperity. Tariffs are a part of that. But there's a lot more that has to be done, and we've seen in recent weeks the America First investment strategy come out. So we're investing into our economy and our technologies with national security in mind. We just saw a couple days ago the announcement about the new U.S. investment accelerator. All of these things are going to help us be an economic powerhouse and a manufacturing powerhouse, because not only do we have to design and innovate and code new technologies, we also have to build them, because it's imperative to our national security.
And companies have been trying to build them. And ultimately, using the CHIPS Act, previously you've had Intel promised at least $8 billion to be able to bring manufacturing of chips here, as well as R&D, another $3 billion being promised if they bring R&D to the military there in particular. But now that hangs in the balance. I understand and hear you in terms of there's this new U.S. investment accelerator, but that is a cause for uncertainty for these companies too.
It is, but look outside of just the CHIPS Act. You had the SoftBank investment, $100 billion to start moving to $500 billion to build AI, data, and energy infrastructure here in the United States. TSMC dedicated another $100 billion. At Purdue Research Park, the Kroc Institute is at Purdue University. At Purdue Research Park, SK Hynix, $4 billion to build advanced packaging. Hyundai just did $20 billion in Louisiana. So it's not just CHIPS Act and federal spending, but there's a lot of private sector companies from foreign countries that are investing here because they want to build here, and it's all good news for the United States.
Michelle, I think, therefore, an element of uncertainty here. We can see what the US wants, but it's how the others react. And for many in technology, they're wondering, how do digital services become impacted if Europe fights back on these tariffs? How do you game that out for business leaders?
Yeah, I think that's going to be a short-term and a long-term conversation between the U.S. and Europe, and specifically our tech companies and their regulatory bodies. But I'll say this: European Commission head Ursula von der Leyen said yesterday that Europe is always going to look out for European values and European self-interest. The United States has to do the same, which means that there has to be a level playing field between our most trusted partners, just like the EU or Mexico or Canada, in addition to adversaries like China who are trying to compete and lead in technology. And so this is all about looking toward America's self-interest. We have to manufacture, we have to build, we have to innovate, and make sure that we are re-engineering the global system in order to serve that so the United States can lead.
And to compete against China. Will this ensure that? Or could we see TikTok almost become part of the negotiation, which takes many by surprise?
We'll see. The deadline's coming up on April 5th, and I think we're going to, the president has said he wants to try to find a way to maintain their presence here while protecting our national security. We'll see. But it is law that they have to divest or leave the United States. In terms of the U.S.-China competition more broadly, the way that we outcompete China is to innovate and enterprise and manufacture and build faster, better, and smarter. And by focusing on our ability to do all of those things here at home, to unleash the private sector, is our best chance of winning and leading, just as we did in the 20th century.
Michelle Guider, it was great to have you on. Thank you. Purdue's Kroc Institute for Tech Diplomacy. Stay well. Meanwhile, coming up, plans for TikTok, well, they remain up in the air. Just 3 days left before its potential ban. We speak with one of the bidders who's been in it for the long haul. It's Frank McCourt Jr. This is Bloomberg Technology. President Trump is set to hold a meeting today to discuss a proposal for divesting TikTok's U.S. operations from its China's parent company, ByteDance. This comes just days ahead of its April 5th deadline to be sold or to be banned. Sources say the administration is considering currently a deal that would include Oracle, Blackstone, and other investors in a joint venture. This proposal, though, is just one being put forth by a number of interested parties in purchasing TikTok. One of those who put their bid in near the beginning is Frank McCourt Jr., Project Liberty founder and executive chairman of McCourt Global. He joins us now. Are you going to be there in Washington for this meeting, jetting off after this? Have you been part of this conversation?
No, I'm jetting off after this, but not to Washington. And so we're interested in seeing what comes out of the meeting. There's still a lot in motion, let's say, right now, Caroline.
What do you think really is in motion? Is it a broader diplomatic sort of ping pong that Vance, it seems, is mainly leading the charge in? Or is it actually just trying to work out which bid works best for the U.S. law?
Yeah, I think it's really beginning to digest what the real issues are here, what's really in that legislation upheld by the Supreme Court, meaning where does the algorithm sit? Who has access to it, for example? The fines. Huge fines here for any violation of the law.
Yes.
And who is responsible for those fines? So I think that now we're getting to the point of a real analysis of the law and the Supreme Court ruling, and what is a legitimate bid? What is a real transaction where one could buy TikTok, US TikTok, and meet the spirit and the letter of the law?
Let's go to your offer, because as it stands, you don't want the algorithm. That fits the letter of the law, right?
Correct. Yes, it does. And that's fundamentally the point here. You can't dodge that issue. The algorithm is, along with the source code, the way that China is able to manipulate what Americans read, see, and eventually think about issues. And this is highly dangerous for America. And that's why the legislation was passed with a broad bipartisan support. And so we now have a set of issues where you need to completely disentangle from the Chinese technology in order to have a bid that complies with the law. And the reason why we still believe our bid, our offer for US TikTok, is the only offer that actually meets the letter and the spirit of the law. We don't want or need the algorithm because we have a clean stack that we've been building for the last 5.5 years.
We understand there are 4 bidders. I'm going to go into one of them more cleanly in a minute. But who else do you understand to be the bidders out there at the moment?
I'm not 100% sure. I've heard the number 4. I don't believe there are 4. And I think that there may be a mixing and matching of bidders that we're hearing about as well. So I think it's all very much a fluid situation right now, Caroline, and we'll learn more this afternoon.
This afternoon, we understand that President Trump is hearing the latest ideal around Oracle being part owner. They are already an infrastructure provider. And Project Texas, which was thought of under the previous administration, was meant to be the way in which Oracle could preserve ultimately the data of US citizens within using TikTok. Is that going to be a legitimate way that TikTok is sold here in America?
Let's think about source code and operational code or algorithm. The issues are not just where it sits, but who has access to it. And this is the source code or the algorithm could sit somewhere, but if China still has access to it, that's highly problematic. And I think at the end of the day, China has been clear. It seems to me anyway that they've been crystal clear. They're not letting go of the algorithm. And what also seems to me crystal clear in the legislation is that any bid that includes the algorithm is not going to meet the criteria laid out in the law. So there's the issue. And again, I go back to the reason why we made the bid and did it on behalf of Project Liberty. It was not because we set up Project Liberty to purchase US TikTok. We set up Project Liberty to bring forward the set of issues that are problematic with the current tech design that we have right now. It just so happens that TikTok was an opportunity that presented itself where we stepped forward and said, hey, why don't we turn a problem into a solution here? Let's buy US TikTok, move it over to a clean stack where you and I control our identity, control and own our data, permission its use, and basically have a different internet, which I would argue will be vastly better for people, vastly better for democracy, for society, and for children.
You want a decentralized future of social media. At the same time, the administration is trying to weigh up future relationships with China. We also know that President Trump really liked using TikTok as a way in which to tell his message during the campaign to the younger audience. When you think about the potential Oracle bid, you said it's very fluid, but who else might be joining that? We've heard of Blackstone, we've heard of VCs, for example. Do you know any other players that might be getting into that bid?
Well, we've talked to, I believe, all of the existing investors in ByteDance, U.S. investors in ByteDance. And I think all or most all would be happy to stay involved in the transaction. I mean, why not, Caroline? It's better to spin off a company, keep an interest in it, hope for the best, rather than have the company shut down.
So General Atlantic you're talking about.
So all these names that you're hearing, they're all around the deal because they have an interest in the deal. As far as President Trump and his affinity for TikTok, we can create a version of TikTok that he'll like just as much, if not more, because it will do the same good things without putting Americans at risk.
Do you think there's any way that we get a deal by the deadline of the 5th?
I personally think that's highly unlikely, but we'll know more this afternoon or certainly by the 5th.
And are they coming to you directly? Who are you speaking to within the administration?
Our conversations have been with the Vice President and the Vice President's office.
And the leaning you get from Vice President Vance, is he taking into consideration the future of how social media works within the United States, the future of an algorithm being in China or not? Or is he seeing this much more as a diplomatic effort?
Oh, you'd have to ask the Vice President that. I certainly hope he's seeing the broader issues of the future of the internet, and I know he's concerned about our national security.
Many are also questioning just the price point. What would you be willing to pay without the algorithm, without the so-called secret sauce?
Well, we've put a number of $20 billion on the assets without the algorithm, and so and we're sticking by that. We think that's a very full number for just the user base and the data. We're not getting all that back end, but we don't want or need the back end, and that's the point, right? We've built it, which is why we happen to be in the right place at the right time for this transaction. We meet the spirit and the letter of the law. We keep U.S. TikTok lit up, and everybody wins.
Is there any way that they go back to Congress and re-offer this deal? Is there any way that that law ends up not sticking?
I can't see it. I can't see it. This was a law passed for good reason. And as I said earlier, highly broadly bipartisan. People saw clearly the national security issues associated here and the risk to the United States and to U.S. citizens. It was a law that was appropriately passed, one of the few that was passed with bipartisan support, and in the speed at which it was passed. Signed by the president, upheld by the appellate court, upheld by the Supreme Court. 12 judges said this is a valid law. This is a real set of national security issues. 0 judges were on the other side of that. Many of the same people that voted for this law are in the Trump administration. Mm-hmm. They understand the issues, and that hasn't changed. And what I want to emphasize is there is a solution to this. There's a solution that meets the criteria of the legislation, keeps TikTok lit up, protects American citizens, and begins to show the way of a new internet.
Will current users of TikTok love your vision of the internet as much as they love the algorithm?
I think they're going to love it more. We call it the people's bid because we're going to Green Bay Packer it, give them a piece of it, let them actually benefit financially from the growth of the platform and the value there, not just from the business they create on the platform, but why not give them a piece of the entire platform so that they can benefit from the equity that's built up in the platform itself.
Bringing in the sports, we love it. Thank you, as ever, for joining us. Let us know what comes out of your discussions post the meeting today. Frank McCourt of Project Liberty and, of course, McCourt Global, he is potentially offering to buy TikTok. Now, Tesla shares rebounding after the headline from Politico says that Trump told his inner circle that Musk will leave soon. We're currently up 2.4%. Remember, we had news on Tesla's deliveries falling, but now we understand from Politico that there could be a move of Musk exiting the administration in terms of his current role, telling his inner circle that Musk will leave soon. Politico reporting. Up next, an exclusive conversation with the CEO of Roblox. You don't want to miss it. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Now, if you have children, the chances of you knowing about Roblox are pretty high. It's a virtual universe, of course, that allows users to create, to collaborate. Nearly 85 million daily active users. Roblox is out with a slew of announcements, including a partnership with Google, as well as new parental controls. Shares rallying following the news, and let's just unpack it all in an exclusive conversation with Roblox CEO David Baszucki. David, it's great to have you on the show. And I'm so interested in what analysts are calling right now a smart strategic move, this partnership with Google. What brands are responding to this new partnership you've unveiled?
Hey, great to be on the show, and want to highlight, we shared a really huge vision of having 10% of all gaming running on Roblox, which is a really big vision. And, we feel gaming is still in the prehistoric times as far as how people consume and use gaming content. We have a huge creator community who is already creating amazing businesses. This partnership with Google is another way for those creators to help build their business and monetize. And for our older users, we're going to give our creators side-by-side virtual currency and side-by-side subscriptions, another way to help build their business on Roblox. We have many creators making over $10 million a year on the platform, and some making over $50 million a year. So this is really sponsoring big emerging studios building on our platform.
It's about the ecosystem. I'm interested, you say for older users, who do you think the brands really want to expose themselves to right now in terms of generations? Is it still all about Gen Z? Is it skewing upward?
We shared the vision, once again, of ultimately getting to 1 billion daily active users on our platform with this intermediate step of 10% of gaming. And in last quarter, we shared a lot of fun stats. Our 17 through 24 age group is growing very rapidly. We've become a platform where more of our users are over 13. That 17 through 24-year-old segment is really hard to reach. More and more of them are on Roblox as we start to have amazing experiences, whether it's NFL Universe, Dress to Impress, experiences where these types of users are on our platform.
Dress to Impress immediately makes me think about, well, obviously the retail opportunity for brands, but also how it becomes synonymous with physical world too. Take us forward as what really advertising will eventually be for Roblox.
Okay, well, if we step forward, way forward in a sci-fi scenario, I can imagine, just like it's fun to go shopping at the mall today, of course, we're going to go shopping with our virtual avatars. We're going to be able to go to stores, see our favorite brands. We're going to be able to try clothing on and see how it looks on our avatar. We're going to have a lot of fun doing it. And when we want to buy the physical or the virtual item, we'll be able to make that purchase. So we may look back in 10 or 20 years and go, oh my gosh, it was weird that all of our shopping on the web was 2D rather than jumping forward to a future 3D and ultimately 4-dimensional world. So someday maybe we'll go virtual shopping together.
Well, advertisers are going to be excited by it. The analysts are excited by it because ultimately this will become a bigger and bigger part of your business model. When do you think you'll be able to break it out and show just how much advertising is bringing to your bottom line?
Yeah, we, once again, on this journey to getting over 10% of the gaming market space, we've shared we expect to be growing our bookings at over 20% year on year, continuously going forward, while generating a lot of cash. And we are looking forward to when we break out the advertising revenue and the commerce revenue. We haven't shared when we will do that.
Oh, come on the show, Dave, on the show.
What?
You got to break it for us on the show.
Oh, I can't break it on the show, but I'll call you before we break it out, and I'll let you know.
I appreciate that. Look, more seriously, for brands to really commit here and to stick with it, for your users to remain, it's also all about safety. I know you've been putting a lot of thought into that. You've got new parental controls that you're announcing today for us. Dave, talk us through them.
Yeah, we'll take a step back. Even when we first launched the platform very early on, our goal was to build the safest place on the internet. And as Roblox has become more embedded in our culture, we're constantly shipping safety improvements. We're really trying to support parents to make great decisions for their families. So we already preemptively have screen time limits on Roblox. Parents can set that with their family. We're announcing today more parental visibility. Parents will be able to see where the people in their family, the younger people at least, are playing on Roblox. They're going to have more and more control of who their kids are friends with. And they'll actually have control over what experiences they might say is not appropriate for our family. So this notion of focusing on safety and giving parents control, in addition to all of the other safety work we do, is really a big priority for us.
How does that fit with the kids' actual experience, Dave? And how do you think in any way we'll start to see less time spent on the product?
we once again, there's something really cool about Roblox and this form of social media. The form of social media that Roblox is really communication and connection. And when I was a kid, sometime on rainy days, I would pick up the phone, and that's how I'd hang out with my friends. Roblox is less about sharing short videos and watching them by myself or sharing images of myself. It's about doing things with other people. And so I think parents working with the young people in their family will figure out what's right for them.
At one point, you did suggest that if parents don't trust the product, they should keep their kids off. What's the reaction been to that, Dave?
Well, I think there was a lot more context to that. What we were talking about is comfort and the notion we think parents should be comfortable with what the young people are doing on their platform. We do, safety is our top priority. We're shipping safety improvements every week, and this is just one of many, many announcements. One of the biggest things we do on Roblox is try to keep people on our platform so they don't go to other platforms where they may share images or where they may chat with unfiltered text. So that quote I made was about parents should be comfortable with what their family is doing.
How much can AI make them more comfortable?
So behind the scenes, we're in an amazing time with AI right now. It's changing how we create. It's changing ultimately how people create on Roblox. And we think what's going to happen on Roblox is rather than maybe the text world or the image world, which is the 1D world or the 2D world, on Roblox, we're going to be supporting the 3D world where people are building 3D objects. Behind the scenes, we've been building an AI platform for 4 years. We have over 200 models running on Roblox. All of the images that people use when they're creating, all of the text, all of the voice on Roblox runs through some of these models. And so AI has really been a foundation of what we've done. Our voice model is so good and so efficient that we've shared it on Hugging Face so other companies can use it. I was just at the Game Developers Conference. I ran into a startup and I said, how are you going to do voice safety? And they said, we're going to use your open source voice model. So we're really trying to give back to the community in these areas where we've got, expertise.
Yeah.
And we've also joined a consortium to try to make this open source for more small companies.
That consortium, Roost, robust online open safety tools alongside Google and Discord, just how collaborative is it with other platforms when it comes to safety, or is there more collaboration needed, Dave?
We're one of the founding members. We want to more and more make open source some of the models we've built for safety. Voice is arguably one of the first steps for that. And it's exciting to me that I'm starting to hear of small startup companies who will simply use our voice model. We've also made our 3D foundational AI model, the Cube model, also open source. And we believe, once again, these foundational models, because we have such an expertise in training and building them, can be used by others.
I just go back to what you said at the start there, Dave, that you wanted to build the safest place on the internet all the way back in 2006. The world was such a different place in 2006. And yes, we might, as parents, have been anxious about what our kids were doing on the streets. But now we've got an anxiety level around all of what could be going on the internet. And then you add AI on top of that and the moderation crisis that evolves of that, of ever more content that you have to oversee. Just what does it feel like as someone who I know is a parent, has their nephew, nieces using Roblox, is really thoughtful about the future of the internet? Does it upset you, or how does it make you respond when the worst of humanity creeps on it?
I'm surprisingly very optimistic, and I'm I'm optimistic because more and more from the safety standpoint, AI gives us enormous power and enormous tools to help moderate both content as well as communication. On the creation side, I'm very optimistic because more and more people on Roblox are going to become creators, and people who feel they could never have designed clothing or could never have designed a new house or could never design a sports car are going to start being able to design these things by talking about them, and not just design them one time, but iterate on them, improve on them. So just like digital tools like Photoshop replaced oil painting, I actually feel AI is going to make us all feel more like creators and supercharge creativity amongst all of us.
So we love the lo-fi vibes of Roblox in the past. How much is it going to become high fidelity, what we're currently seeing on our screens?
The long-term spec for the product, and really one of the most difficult specifications of any technical platform, is giving artists complete freedom. And with video right now, we could argue that artists have freedom. We see animation, we see anime, we see photorealistic, we see hyper-realistic. We're introducing more and more functionality, and we mentioned this part of the notion that we want to have 10% of the gaming space on our platform. So ultimately, artists can either go our traditional blocky style, a more realistic style, or ultimately with some of the cloud facilities, we're building high-res styles that they're used to in some of the other types of games they see out there in the market.
You talk about how you want to serve the market, the ecosystem, the developers. You've done, I mean, the value creation that we've seen with one of the key developers being Brookhaven has been phenomenal. They sold out to Voldex. Do you know the sort of size of deal and how many millions are going for those sorts of purchases?
I can't comment on the size of the deal. I'm pretty sure the deals are starting to get into 9 figures, not 8 figures. At the Roblox Developer Conference last September, one of my 10 prognostications was we're going to see $1 billion market value deal for a studio on Roblox. And arguably, we should see that happen if we keep pushing the technology for the gaming space. And if we have 10% of the gaming in the world running on our platform, we're going to see more and more of those studios start to show up.
Talking about gaming, but you're also talking about how this is ultimately a social endeavor. Who is your competitor right now? Is it eyes and minutes spent on TikTok and social media, or is it other gaming platforms?
It's an interesting metaphor, and as we think about competition, we think more about this vision we have in the company, and also what is technically possible with today's technology. We know it's technically possible ultimately for a young creator to build a really interesting experience, have it immediately be live in any country, have it be within the policies of any country, have it automatically translated to any language, and have it run either on a very low-end device, a 2 GB RAM phone, or a super high-end gaming PC, and allow people to join that experience instantaneously without a download. Because we know all of this is possible and we're building it as quickly as we can, we do sometimes think our competition is our own ability to iterate quickly.
Some might say about TikTok being a competitor. We had Jesse Tinsley on the show previously who said you're supporting his bid for TikTok. On a personal perspective, are you still, Dave?
At a high level, I won't comment on what bid I'm supporting. I do think there's one of the things we're highlighting in our discovery system is transparency. And I think there's an underlying theme of all of these bids, whether the algorithm is running in the US or at the least it's completely transparent. I think people all around the world would like to see transparency in these algorithms. One of the things we're doing more and more on Roblox for the creators who also our users find cool experiences on Roblox is being very transparent with how our algorithm is working, so developers can know how we're forwarding things to the user. But I do think whatever the bid on TikTok is, we're going to see transparency of that algorithm and arguably an air gap where that algorithm has to run in the United States.
The administration pretty involved in the TikTok bid. Now, the administration, the current SEC now inheriting a potential investigation into Roblox. How is that going, Dave?
I can't comment on that. I constantly say we run an extremely tight ship, and we're very proud of everything we do.
Pride is something you want to make global, and you're talking about how people can create an immersive world and immediately go into any language, any country. Right here, right now, it's quite difficult to be a global company when based in the US. How do you feel about the trade anxiety that's currently undergoing and what it means for your business?
I was just in Emirates at the World Forum, and what was interesting is in Emirates, there are some top Roblox creators who are contributing code to some of the top experiences on the platform, and also some top creators who are fashion creators who are doing quite well in the virtual economy on the platform. I'm optimistic for platforms like Roblox, where there's a demand for amazing content. More and more of our creators, whether they're in the USA, whether they're in the Gulf region, whether they're down in Brazil, where we have an enormous activity. I'm really excited that we can offer a global economy for these creators, and we see our top creators coming from all around the world. Dress to Impress team, for example, I believe is in the UK.
Your username is Builderman. Are you still busy building a view that this is going to be the metaverse, that we're going to live in that in the next few years? Is that what the ultimate vision is here, Dave?
The vision we have is humans are always trying to find a way to communicate. And we used to use the mail system. We use the phone system. We use texting. We're on video. We're communicating on video. And we believe 3D communication is going to sit side by side with that. 3D communication is pretty interesting. We can change our avatar. We can play hide and seek together. We can go to a concert together. So we're really optimistic about what we call this evolution to 3D and 4D communication. We think it's going to be big. We think this is a natural evolution of technology. We're in a great opportunity to help usher this in a safe and civil way. And when we get back to building, we actually call our people and our team within Roblox builders. So that Builderman idea has really stayed with us.
Dave Baszucki, great to have you on the show. Co-founder, CEO of Roblox. Stay well. Coming up, we're sticking with gaming because Nintendo has announced the release date and price for its highly anticipated Switch 2. Details next. A quick check-in on Tesla shares, though, because we're now up 2.7%. This after, of course, Tesla deliveries come in well below expectations, about 360,000 overall, when the market had wanted 390. However, there does seem to be news coming more broadly from the administration, hinting to his close relations that Trump is telling his inner circle that Musk will leave soon. That's according to Politico. This is Bloomberg Technology. Nintendo has revealed new details for its highly anticipated Switch 2, which it plans to release on June the 5th. This is the video game maker's really first entirely new platform in 8 long years and has the potential to lift sales after a pretty lackluster few years for the industry. Here's to tell us more is Bloomberg's Cecilia D'Anastasio. It's expensive.
It is expensive.
So $450. What is that like in context of the market?
There are other handheld offerings now that are on the market that were not on the market when the original Switch was released. And they're selling for somewhere between $400 and $700. But at the same time, Nintendo has a lot of star power that these competitors from Lenovo, Asus, Valve Corp, and potentially even Microsoft, which has also teased a handheld console, do not.
Okay, so it can stand out from the crowd. What are analysts saying to the date, the price point, the release?